Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Talisker Resources. Talisker is traded on the TSX under the ticker TSK and on the OTCQX under the ticker TSKFF. And I'm joined today with the president and CEO of Talisker Resources, Terry Harbort. And Terry, it's great to get you back on the show. We had chatted back in April about the development work going on underground at the Mustang Mine. This is at your Bralorne Gold Project in British Columbia. And you've been doing some lateral development along the Alhambra Vein. And you're getting to the exciting point where you've now hit a major milestone and you're actually trucking ore over to the Craigmont Mill. This is Nicola Mining's Craigmont Mill in Merritt, British Columbia. And so you've hit that point where you've actually pulled ore out of the ground, put it on trucks, shipping it over there, getting very close to the production element that a lot of people have had their eyes on Talisker for a while. I think it'd be fun just to dive in and just explain where you're doing this mining at the Mustang Mine.
Yeah, Shad, no problem at all. Certainly very, very exciting times for us. We're moving a little bit ahead of schedule. Mining at the moment at our Mustang Mine. The Mustang portal sits in between the historically mined Bralorne and King mines. It's in a kilometre basically between those two mines. And it's all basically new veins that have been recently defined. So it's not remnant mining, it's not related to the old production. We're sort of well away from that. And we've got new access there. So we've developed a new portal into that. So we're not using any of the old shafts or any of that old tracked level, how they used to do things in the old days. So it's all new, modern mining, new using modern techniques as well. So we're using long hole development, longitudinal retreat. So in this type of development, you develop along the veins. So that's why we're in a bit of ore grade material now. We develop the decline or the ramp down in waste to make it into the veins. And then once we do a cross cut to the veins, and then we start to develop along them with 3 metre by 3 metre access. And we sort of do that size of development so we can get the equipment in there. So they're the loaders and the trucks that can fit in that space. And then we mine up between those levels in the stopes. And the stopes are generally, they're about 25 metres by 25 metre panels and are narrower than that 3 metre development. So they're only like 1.8 metres wide. So pretty hard to climb up in there or to have equipment up in there. So they go up from those stopes. So yeah, pretty excited now to be producing some more, seeing some good gold grades coming out as well.
Well, let's dig into the development work a little bit more now that you've set the table there as far as how the development works. You're really extracting material from what you would call the 1060 and 1075 development levels. When we were talking last time, we were talking about the 1105 level. So when you're first drifting over into these, those are considered the waste development. But then when you start accessing the vein and when you start seeing that mineralized material come out, that's the development stage you're at. After that, it'll lead to the stage where you're actually mining a little more surgically along the vein. But talk to us about this 1060 and 1075 level and how it looked when you first started having some of the ore drop down and you could see that visible gold.
Yeah, look, so how we do the whole process, Shad, is ramping in. We do that at 4 by 4 metre widths. And that's sort of to fit the size of the trucks, which are 22-ton trucks. And then we develop in waste again over to the veins. And that's generally 3 by 3 meters, and that's basically the size of the loaders that scoop up the material and take it out. With the technique that we're using, which is called long hole, it's a very cost-effective mining method because we do lateral development or horizontal development along the veins themselves. So depending on your level of dilution, there's good opportunity to get ore material during your development. So more often than not, development just goes to the waste pile. But in the case here with the 1060 and the 1075, we've completed the waste development to get to those faces, and then we're developing east and west along each of them. And it's generally lower grade, Chad, and that's the reason for that is because we're developing at a bigger width. So there's more dilution from the the host rock or the country rock that surrounds the veins. So it dilutes and brings that down. So we see the grade drop, from about 11 down to, 8.5, 9 grams. So as long as it's above our cutoff, it's still truckable. Once those lateral or horizontal developments have been done in the veins, the guys drill upwards into the stopes, and the stopes are the mining areas that we mine when we say we're in production as opposed to in development. And they're quite narrow. We generally drill them at 1.5 meters, and we have a thing called overbreak, which is when we blast the rock, a bit of the wall rock falls in. So the total mining width is about 1.8 meters. So a lot less dilution, and we're able to maintain higher grade. And the vast majority of that material would be truck and processed, where our development ore that we're currently in, we've got to be diligent in defining, using our economic cutoff, what's ore and what's waste. And the lower grade stuff goes to the waste pile or gets backfilled into the hole. And the high grade material above the cutoff, then that's used for trucking and processing. Good, your comments there on the visible gold. We do a technology, a method that's called grade control. So initially, when we do all the drilling, we develop a block model and wireframe these veins, but it's quite wide spaced compared to when we're drilling. Generally 25 meters or so maximal spacing on the drill holes. So local variability we don't know about until we get down in the hole. So when we're mining, we're doing sampling, in this case, channel samples. So we basically cut these channels across the veins every 2.4 meters. And we do a thing called muck sampling as well, which is every couple of buckets in the loader that picks up the ore. We take some samples, and that controls the grade, so we know what's waste and what's ore. Fortunately, Bralorne, there's a lot of visible gold or a lot of free gold. So we've also got some visible indicators that it's ore. And one of our first faces, there was almost 100 gold nuggets sitting in the face of the vein. So that's always exciting for the geologist, but also great for us. It shows that the grade control is going to be very strong, and it's going to produce pretty good ore sending off to the mill.
I appreciate you breaking down the difference between the development stage and the production stage. So I guess it's fair to say you're definitely in development when you're trucking this ore, but it's not going to be the less dilutive mining when you're in actual production. But you are going to produce gold out of it. So I guess just in this development stage, what's reasonable to expect as far as the recoveries and what you may produce versus when you actually get into production? And can you give people an idea of how this will look as it ramps up?
Yeah, Shad, our average grade, our average production grade that we're expecting through the first 5 years is around about 11 grams fully diluted. So that's adding that waste rock into the mining. In our development here, we're sort of seeing 8 to 9 gram average material. So it's a few grams per ton lower than our mining grade that's up in the stopes. And that's because of that extra width. It's 3 meters versus 1.8. So there's another 1.2 meters of dilution. Again, we're a bit fortunate at Bralorne because we do have grade in the wall rock. We've got breccia halos around it that on average across the deposit carry about 1.5 grams, 1.6. At Bralorne, at Mustang, they're a little bit higher. So it helps to keep that grade up when you're in development. So that's really what we see, a bit of a reduction in the grade. Obviously, if it falls below a cutoff, then it gets classified as waste because we don't recover the costs of mining, trucking, and milling.
Well, to that point, you're going to be handling the cost on your end, and I believe Nicola handles the cost on their end and processing, and you guys have a profit sharing agreement on this toll milling. What's reasonable to expect as far as ounces produced when you finally ramp up into production? Can you give us a little bit of an idea of how the production ounces will wrap up on a quarterly or yearly basis, and how long will it take to actually get up into commercial production?
So we're taking a fairly steady state path here for the second half of this year, and really we'll only really be in production here for 6 months. we're expecting to produce about in the range of 10 to 15,000 ounces. And, we're expecting to see, about 40 to $50 million revenue throughout that time. Next year, if all things go well, we'll be ramping that up and moving to 300 and then 500 tons per day. And then we'll be hitting our maximal rate further on there at about 750 tons per day, which is what we'll be looking at. All of that's coming out of the Mustang Mine or the Mustang portal. What we're working on now is development planning and mine planning to support opening a second portal and potentially a third portal to look to see if we can double or more our overall production rate. And our initial path here is to get to about 100,000 ounce per year steady state production. And what we're looking at now is additional areas where we can look to double that production and potentially get to 200,000 ounces annual production and beyond.
Well, and just zeroing in on next year, I understand that this is a ramp up year. It's only going to be half a year. You said 10 to 15,000 ounces. But even next year, when you're ramping up your tons per day from 300 to 500 to 750, what do you think's a reasonable ballpark as far as production in 2026? Do you have a rough idea?
Yeah, look, I think we'd like to be over or in the range of 20 to 25,000 ounces next year. Certainly, that's what our current mine plan supports. If all goes well, hopefully we can do more than that. We can increase our production rate. We're looking at starting some development across the Bralorne West, which is really our bottleneck to getting up to that high yearly ounce production rate. So the more of that we can chip away at, the more production we can bring online sooner. And certainly with this all-time high gold price, it's a great time to be reviewing our mine plan and looking at ways that we can fast track, looking at ways that we can also reduce our tonnages but increase our grades. And that's why we're so interested in the ore sorting studies that we've done, and we're looking at fast tracking that technology because it has some immediate impacts for us both on our immediate economics but also long-term mine efficiencies.
Well, let's briefly touch on that a little bit longer for people that maybe haven't listened to some of our previous discussions, Terry. When you're using the ore sorting, you're upgrading the ore, which means you have less waste in it. When you truck that ore over to the mill, you got higher grade material in there. Tell us a little bit about the studies and what you've been seeing so far as the feedback from the team.
Yeah, Shad. So we've been using a sorting technology that's laser based, laser crystallinity based, and it's worked quite well for the Bralorne ore, separating the country rock waste from the ore. We've seen a reduction in the waste through the testing of between 35 and 55%. So that basically translates to a reduction in material by a third to a half. So that can have significant impacts with our current trucking and processing strategy. We've seen the grade, our head grade that we did the initial testing on, the average was 14 grams. We've seen that get increased up to nearly 27.7 grams. And the recoveries were very good in the range of 95 to 99%. So that's triggered us now to move to the second phase. And the second phase of testing is really looking at run of mine material. So the early phase, we train the system, we train the algorithms on our ore. And the second phase is, we just send you stuff from the mine and see how well that goes. So we're in that process now, selecting and sending that material. And we're going ahead with our engineering designs on what's required, and then we can cost that out. It looks like having significant impact if we can reduce our trucking and milling costs by a third to 50%. It really impacts on that bottom line in these critical early stages of going into production.
All right. Well, we'll keep our eyes peeled for more of that work as you continue to look at optimizing with the ore sorting technology. Just a quick question on exploration. You mentioned, down the road, possibly getting over into the Bralorne West area. And I know that some of this area hasn't had as much drilling as the Mustang Mine area that you're going to be mining from here. Are you still looking at exploration and looking at defining new areas while you're underground, or what's the exploration component of the company right now, Terry?
So exploration per se, Shad, we won't be doing a lot of. It's mainly resource conversion. So Basically, as we mine and deplete, we'll be looking at replacing those ounces in an indicated category, so to build that into the mine plan. We have been doing some validation work on a lot of the historical work. So there's a lot of channel sampling, face sampling, a lot of underground mapping. And when we put out our first resource, we hadn't validated all that material. So all our initial resource was based on brand new drilling. So now we're working with our external QPs to validate that historic data, and some of it's quite significant. It's mapping and sampling along veins for up to 1.5 kilometers, and then at multiple levels down veins, down to 1 kilometer, 1.5 kilometers. So there's significant amount of already mapped and sampled resource that we can look to bring in to increase our iron resource and increase our mine plan and really feed that into an increased production rate. So we're pretty excited about that. We've finished being able to digitize all that data. Now we've got a validation process that validates the spatial location and compares the geostatistics of it to our new work. And then we can look at doing a mine plan around that material. So pretty exciting, and it really got the potential to maybe double our current resource using that historic data.
Well, that is exciting and nice to see the validation work going on and higher confidence ounces and a better mine plan built around the exploration work the team is doing. So we'll keep tabs on that as well. I guess just as we wrap up, Terry, anything else you want to say about this big milestone for the company? We're actually trucking ore over to the mill. I know it's still the development stage and not the full-on production, but exciting milestone for the company. Anything else you want to say about the news flow that's coming down the pipeline?
Oh, look, everyone, please keep your eyes out. We are still taking this conservative path. We're executing on our promises. Fortunately, a little bit ahead of schedule, which is always positive. And it's all about execution here, step by step. Don't jump out too far ahead of ourselves. There's just too many failed juniors. So we're taking a cautious and conservative approach here. But fortunately, things are going very well. Our ore bodies behaving as we expect. The modeling of our veins versus the reality of when we mine them is very close. Grade control's good. We're seeing a lot of visible gold that adds to the analysis that we do. Good trucking partners moving that material and preparing the stockpile there to start milling this in the second half of June. And then we see the bit that I'm really excited about, and that's seeing our first cash flow probably coming early July. So super excited to be able to see that and see the business coming full circle, coming to fruition, coming all the way from exploration, just 100,000 ounces, up to a producing mine. A really great milestone for the company to achieve.
Yeah, it's definitely an exciting time for Talisker Resources, and that will be exciting to see the cash flows come in and the revenues generated. That's the whole point of the mining business, and where a lot of companies will never achieve that, Talisker is on track to become a new producer here in British Columbia. So we'll keep tabs on all the news flow from Talisker Resources. And for those listening in, definitely click on the link below in the show notes. It takes you over to the Talisker website, straight to their news section, so you too can follow along. And Terry, keep us posted. We'll get you back on for an update, and looking forward to our next conversation.
Thanks very much.